My name is Triffany Hammond, and I'm here today talking about ways to use long-term resistance to put shorter-term moves into a context in your trading, and how to kind of drill down using those zones that have been established, absorbing a lot of price points, a lot of news releases, and finding those areas and hopefully finding ways to help those or help you identify places to use in your own trading. So I'm just going to go ahead and start with the pound dollar. That just happens to be what's up on the charts right now. And we actually had some good movement late last week and again in the early part of this week. So we're going to go ahead and start here. The first thing I want to talk about is taking kind of an overall look at what's going on with the pair currently. Obviously, we had large period of significant short selling, and then a pulling back up into the long side of the pair. What's significant about the short side, though, I want you to consider this, is that, you know, at the time, those of us who traded through this time, at the time it all seemed extremely severe. But at every given moment, we had pullbacks. We had times in the market when it wasn't so convinced it was ready to sell. When we start to see these times, that gives us kind of an idea that the selling side of the market might be losing some steam. We're going to carry that forward, and we got a new lower low back here, and after that, we started to get some significantly higher highs. So we started to see what was possibly an entire trend reversal, right? So what we're going to do now is talk about what's going on currently. What we're seeing is in this buying area, we really didn't have these deep pullbacks. See how these pulled back deeply to the upside before it came back down, deeply to the upside before it came back down? Well, instead, once the market showed some kind of decision and broke significant resistance levels, it actually kind of made a steady climb up. When we see that, there's a tendency in the market, as we know, that the market doesn't just scream in one direction. It goes one direction and pulls back, goes one direction and pulls back. And generally after large moves, impulsive moves is what I call these. After we see large impulsive moves, and this was 1, 2, 3, 4, 5, 6, 2 weeks full of bullish moves, it's extremely typical for the market to pull back to some degree, if not an entire pullback like we saw to a large degree here, a consolidation. And that's what we got here, where we had a pullback here and then just kind of some sideways movement. Now the market actually tried to pick a direction, it looks like, to the shorter side, or to the short side, I shouldn't say shorter. So what I'm going to do then is let's put on some trend line here and see if we can get a feel for what that pullback action was looking like. What areas the market respected on the longer term charts and which areas did they not? So here we've got a trend line that shows kind of the movement that the market started to grab hold of in its ascent, in its long in its choice to go long. And there were times when it looked like the market might be tiring out and couldn't pull back. In fact, pushed higher up and then came back. So I'm going to choose this bottom where it pulled back here, where it nearly pulled back here, and then where this consolidation area showed some more, this tightening up area, kind of that area of indecision, where the market, there's this push and pull, there's this tug of war between the bulls and the bears, the buyers and the sellers, right? Now, last week we talked about what some of this price rejection meant up here, and we were talking about other pairs, these long wicks or long shadows, and how sometimes that can really be an indication that the market is, if it hasn't chosen a direction entirely, at least it's rejected temporarily the top side. And we did get some of that pull down. Now, the thing that I find interesting, and what I'm looking at now in terms of price behavior, is we pulled back, but we pulled back, lost enthusiasm near the bottom of this consolidation area. If you were to choose, this top, this bottom, and stretch it out, the market is actually printing a new higher low. Keep this one in mind, this purple one I'm about to delete. I just don't want it to muddy the waters while I'm talking about this. So even though the market rejected this price point at the top, it actually couldn't even quite get to the bottom of the consolidation area it had chosen in the first pullback, right? Can you see that there? And now actually, as of yesterday, we see some sharp price rejection going on against the support area. Now, right now, we're not making any trading decisions based on this. We're just trying to draw a frame of reference to put some idea as we come in closer to the time frames that we want to trade, and look a little bit deeper into what the market might be doing right now. Okay, so here's our context. We have a new higher low within this consolidation area. So it looked to pick a direction with a close below that trend line that we had here. And now it's not so sure. Oops, that's not the one I picked. It's right here. And now it's not so sure. We're seeing that indecision now. What this could mean is that the market might just pull right back up into this range, maybe even use this trend line. Very often when you get trend line breaks like this, it'll pop down, come back up, and retest that trend line. But more than trend lines, what I'm interested in watching is actual horizontal support and resistance zones. So here's what I'm looking at personally. You can see how it didn't come all the way to these bottoms, and with this large candle that it created, it hit this previous support, now resistance line right here. So now if you can just bear with me here, you're starting to see this tightening up action, how we might have on our shorter term time frames some area that we can make some decision about in terms of our trading. So let's move down to the 4-hour chart and we'll do exactly that. Now somebody made a comment on my first attempt at getting through here, and they asked, just a plain chart? There's nothing else on your charts. I've got no moving averages. I've got no oscillators, nothing like that. And what I want to really impress upon you is that you can trade just like this. That what we're really talking about is reading sentiment, market sentiment in price action alone. And that's what's really important here. Okay, so now we're looking at the 4-hour chart, and we see a little bit of a different picture. Now, this resistance zone that it seems to have rejected once here, it looks to be rejecting again, is actually kind of muddy in here, isn't it? Where we had wicks on the daily chart that we could say very easily that price came down and then very quickly rejected, now we have some bodies that we have to consider. And let's see if they tell the same story, because that's going to be really important about identifying whether or not this is an important price point to the market. The tricky thing about support and resistance, and the reason why some people can't do it, is it is in part subjective. It's very difficult to find a particular price point that's important, and it ends up being this zone, because money's trading hands in the billions and trillions of dollars every single day, right? These exchanges are happening, and so it can't happen at a specific price point all at once. And it creates these crazy little zones. So let's see if we saw something in here that might change our minds about what's going on price-wise. Well, clearly we had the market pull back through. We had some price rejection at the top levels where we have that larger box on the daily chart. Rejected it, came up, couldn't quite hit it. That was a new lower high in that case, and pulled right back down. What it did do at this price point, which was previously support, and then right in here became resistance, it kind of muddied the waters. It whipsawed around there and created, a whole lot of undecided sentiment. I mean, it's all right there. Pops down, creates a reversal pattern. You get your confirmation candle right here, but then it comes right back down. You can see all this indecision. Pops down, reversal candle, we get a confirmation candle here, does the same thing. So really, even though these are actual full bodies now, looking at this support and resistance zone, where on the daily chart they were just long wicks, you can still see that measure of indecision. So what we want to take is, rather than looking backward and say, yeah, I can see all of that in retrospect, we want to see if we see any kind of behavior like that going on right now. Are we seeing evidence of indecision going on now in this same area, in this zone that the market showed fear, or at least maybe not fear, but indecision, right? Are we seeing any of that behavior going on right now? Well, we did get our new higher low right here. And for those of you who caught that and caught some of this long move, it really is showing hesitancy in going above that price point that we just chose. I'd say 63. We'll round it up to 45. Okay? And instead, we get a new lower high here. So now as I'm looking at this, I'm seeing some of that same indecision we talked about over here going on right now. Even though we got some nice clean bounces, we got some really strong candles that showed the market acted with conviction, even though we got all of that, it's stopping short right now. So this becomes the area that I want to look at as a potential place for the market to do some whipsaw action. Now, we'll go to the 1 hour chart and see if we're getting any clearer story. I'm going to go ahead and keep that larger zone, that muddy zone we talked about on there. I'm going to get rid of the price point. And we're going to take a look at this again. Now, last week I talked a lot about how typical consolidation patterns will happen where you get this one large swing, doesn't quite go to the bottom, doesn't quite go to the top, doesn't quite go to the bottom, and we really get this winding up. So clearly, at the very least, even if the market is showing indecision right now, at least it's showing indecision in a typical way. It really scares me when I start to see, where it makes a midway swing, kind of goes sideways, bumps back up, and then comes back down. And there are kind of these movements that you expect to see when you start to. Here's a good example of that. How we got this one large swing, and instead of cutting short, like it typically does, it actually went all the way to the top and then went sideways, came back down, showed rejection, bumped back up, and then came back down. You can see how if I was looking at this as a consolidation area over here, it would make me a little uncomfortable because it's just not typical. And if it's not typical, it's not something that I want to be putting my money at risk on. I want to be putting my money at risk on the trades that I feel most confident about, that behave in the way that I'm accustomed to in terms of my own backtesting and experience. So, although right now, based on this bounce, this possible bounce and a potential new lower or higher low, from a technical standpoint, I am bearish on this pair because what I'm seeing is typical behavior for a consolidation area. I'm seeing two candles right here that created, sharp price rejection at 63.42. Even got a confirmation candle right here with the body of that closing below the bodies of the reversal candles. But you can see immediately how I've got this other area of indecision. So what that means to me is the zone that's important if I'm a 1 hour trader is, in my mind, this most recent support and resistance area. If it breaks below that, I want to then look for a possible profit target that is not going all the way to the bottom where it's hit before. That's really aggressive. If we're understanding consolidation patterns, we don't want to shoot for old lows because if it's going to just consolidate, it's not going to get all the way down there. And we don't know at this snapshot in time if the market is really going to push a total reversal of the recent uptrend. The recent uptrend being that we saw on the daily chart, right? We just don't know that. So what I like to do is find those areas as potential profit targets that might be a support and resistance area near those lows, but where the market showed some kind of hesitancy before. And the 1.60, you know what? Since it's so close to the even number, I bring that up to 61.05-ish. Right in there. And look, right in there, we got this bounce back here. We have all of these wicks showing rejection at that same price point, and it's about where these two little shoulders hit right in here. This one dips a little bit below. Now, just for curiosity's sake, because I love Fibonacci's, I'm going to put a Fibonacci on. That's sweet. Look at how that worked out. I'm going to put a Fibonacci on my consolidation area, and I'm going to say and look at and see if there is a mathematical potential for this to pop out of this box and come down to my price point, and it comes pretty darn close. That was a lot to absorb, so I'm going to check for questions. Bear with me, my charts might pop away for a second, but I'll pull them right back up. Okay, excellent. So not any questions. I was either really clear, I completely confused the heck out of you. Great. Let's go back to that 4-hour chart. The other possibility is we are in such a large consolidation area that there's nothing in the rule book that says this can't pop above here and still within this consolidation area find some other price point. It doesn't have to bounce down and away, does it? In fact, we arguably have a double bottom here. It did make a new higher low where we had, this wick dumped down below there. But the bodies, let's put a line on there and see where that lines up. The bodies on these candles hit almost where the wick on that, or the shadow on that one does. And so we have arguably, as this came down from the top of that larger consolidation area, popped up, market said, not quite ready for the long yet, came back down and said, but you know what? We really don't want to go shorter than this. That gave us the sentiment of a double bottom here. Double bottoms aren't confirmed double bottoms until they break the neckline, until they come up and break the neckline. Now, then I know because I'm cutting off those wicks, I'm going to get questions about why am I doing that. I have a tendency to cut off wicks because as you drill down into smaller time frames, generally what this appears is kind of an anomalous movement where the knee-jerk, impulsive, where the market just popped up and went, oops, never mind, and they came back. So this is looking to me like really good resistance. It happens to be at the top of this box. So the opposite side of the trade for me would be a trade to the long. I'm going to throw on my fibs again. I'm going to grab that 100% extension, which is actually the 200% level up there. And I'm going to move back to my 4-hour chart and see where that lines up support and resistance-wise. And that's actually, this is hard to read because it's kind of muddy. I might actually tighten that up just a hair to grab some more of these wicks and bodies in here. The market right now, the price action is so choppy, and honestly, I don't expect it to get any better anytime soon. At least not till probably end of earnings season, maybe the end of the summer even. So that looks good to me. Right there at about 64.55 is a potential profit target. Now, the next question, of course, is stop loss, and I really I feel uncomfortable with the question because it really becomes a matter of whether or not your psychological profile matches what I do. I actually like a really deep stop loss because my psychology cannot handle being whipsawed. It makes me insane to be whipsawed out of a trade. And then I get fearful to get back in, even though my analysis was right. And these are my psychological issues, right? So to address that, I've done a ton of back testing, I've done a ton of paper trading, and then I've, of course, traded it live this way to take a deeper stop loss. Now, sometimes that means my losers are bigger than someone who takes a smaller stop loss, but I don't have as many losers, right? So it's okay with me to take that larger hit. Where someone else, whipsawing is fine as long as those losers are minuscule. As long as they're tiny little pip amounts, they're totally fine taking 10 hits in a row. But if they were to look at, 100 pip stop, loss or something like that, it's going to crush them psychologically. So that's kind of something you have to consider for yourself. But what I like to do for a stop loss, I'm just going to give you two options, actually. What you can do is after you find the consolidation area that you're willing to trade, you can take a stop loss that is a close right back inside that box. You can just say, oops, I was wrong. Instead of retesting and bouncing off of that area, you kind of expect it to pop out, come back, retest, pop back up. Instead of doing that, it closed back inside. I was wrong. I'm just going to get out. And that'll keep your stop loss really small. The tough thing about that is it's conditional. So you're going to have to play with that in your testing, or if you are using live money with it, just take really small amounts. What I like to do as these kind of goof around inside, so here's my larger swing, here's my shorter swing, as I expect this to kind of go sideways, by the time it pops out, and this could happen long or short, there's going to be a bump or two in there that I can find as what I call minor support and resistance levels, and I like to go 2 of those levels inside. So let me just find an example. of what that looks like. So let's say I had chosen this. Oh, let me take my scroll off for this. Let's say I had chosen this particular consolidation area over here, and I said on a breakout side of that, I'm going to go ahead and go short. Well, inside of this, you can see. I'm just going to clean this up. You can see right before it popped out how these candles had some respect for a level right in here. That would be one minor support and resistance level in my mind. And then these two candles did the same thing, so my stop loss is going to go above there. That's for me personally because I don't like the whipsaw. All right, let me see what that brought up for questions. Okay. What if there's a breakout at the top of the line? Do you look at the trend on the hourly? Okay, yeah, maybe I actually answered that for you in terms of, because I looked for questions first and then went back to the long option. Hopefully I answered that for you. If not, ask again in a different way and I'll see what I can do. Can you comment about the dollar move this week? Yeah, you know, it's earnings season, and I think that there's just going to be a whole lot of, you know, buy the rumor, sell the fact type reactions out there. I think the market is trying to get in on what's really going to go on with some of the big market players as a measure of whether or not we're actually in a recovery slump. And you know, really, honestly, not just this week, but the past week, it's been 2 days sell the dollar, 2 days buy the dollar, 2 days sell the dollar, 2 days buy the dollar. So it's kind of just been this back and forth action. And I really do think that until we see some kind of concrete measure that the market says, yes, that's proof enough for me that we're either recovering or we're not, and we kind of get out of this gray area, I think we're going to continue to see some of this back and forth dollar strength, dollar weakness. Do you cut off wicks for the fib levels too? I love to start with the fib levels, and then I find a support and resistance area that's near that. I don't know if that makes sense or not. I can look at that again if it doesn't to give you another example of that. Oh, I know what you're asking, is when I put them on. Yeah, sometimes. And you know what I'll do? Let me just go ahead and talk about this for a minute. You know what I'll do? If I'm not sure about where I want my fib levels to go, I'll play with a horizontal line first. Hopefully one of you will private message me if you cannot see the charts, because I just went from comments back to charts, so let me know. I will play with an area that I'll look at it. Most of the time, when you do support and resistance trading, you can kind of eyeball this stuff pretty well from the start. But I'll look at an area, and I'll kind of play with it, and I'll see, you know, do I get more hits here, or do I get more hits here? Do I like deeper or the taller? Generally, what I'm after, though, by the time I decide to put on my Fibonacci's, what I'm looking for is making the most advantage, or taking the most advantage of that larger swing before we get those interim swings. And this is wonderful that we're seeing this on the 1 hour chart as well. You can see how what I was applying to the daily chart is actually happening on the 1 hour as well. Large swing to the top, price rejection, new higher low, and now we're starting to see this tightening up. It's true across the board. A typical consolidation area is going to look like this. Now, I'm a very visual person, so this is something that works really well for me. It may not work for others, but I'm going to encourage you to test it and try it, because even if you're not visual, starting to plant the seed in your head for reading market sentiment from price action is going to be a really good tool for whatever does work for you. So what I do with my fibs then is I take that entire market sentiment, that first swing, and I look at that whole area that the market showed confidence and then fear. I put those fibs, I put my line at that 200% level, which is really just a 100% extension from of the channel. Move to a longer time frame and see where that lines up support and resistance wise, if I like that or not. Usually I end up tightening it up just a hair. See, so here for me, I'm seeing some more solid hits of this price point than I was of the taller price point. So that's what I do. But obviously you want to test it and see what you would do. The two might be very, very different. Okay, and it looks like we're getting close to time. Or I guess we started late, though. I don't know, Maud. Are we going to be stepping on someone else's toes if I don't wrap things up here? Oh, you know what? I don't want to ignore this question either. How do you get your sanity back? I'm assuming that's talking about when I say it drives me absolutely nuts to get whipsawed. You know what? That probably is one of the most productive questions that you can ask yourself. What is it going to take for you to get your head on straight again? Right? We all go through those psychological things. For the person that can't handle the deep stop, that takes a deep loss, they're going to be kicking themselves left and right. They're going to be blaming themselves a million times over because they should have known better and they never take a loss like that. And the person like me who takes the whipsaw, my thing is, gosh darn, my analysis was right, and here the stupid market just dips down just enough to take me out. And how do you get your sanity back? How, in what ways can you regroup and gather yourself? The very first thing I do, Gus, I love that you asked this question. The very first thing I do is I go back to my trading plan. I go back to the piece of paper that I have that tells me I was willing to take this trade under these conditions, and the first thing is I see, did I do something stupid in my plan? Generally, the answer is no there, because I made my plan during times of sanity and calm. I was collected. I was able to look at that when things weren't running amok in the market, and I could just focus. So generally, the problem's not in the plan. The next question I ask myself is, did I follow my plan? Honestly, I've gotten to the point now that as long as I've followed my plan, I can just let go of the loss. It doesn't even matter to me. But if I've done something stupid in the execution of my plan, I walk away from the charts. I walk away from trading for, usually the rest of that day. And I'm usually okay by the next day. But when I first started this whole process years and years ago, I'd have to walk away from the charts for days to regroup. You get better at it, I guess. Let's see. Is this recorded? Yes. When placing stops, I hope I answered that for you. Oh, that wasn't the end of the question. Do you look at daily range to set stops? No. If I'm trading on the daily chart, I will set daily ranges. If I'm trading on the hourly chart, I will use my stop from the hourly support and resistance areas I see. It's a really dangerous thing to see that to take a trade on the daily chart and then move your stop on a smaller chart, a smaller time frame. Because then you do end up in those situations where you're tightening it a little bit too quickly, especially in a trending market. Let's see. Have you got a website? It is in progress. Please stay in touch with me and come to my Tuesday stuff to find out the news. But I actually am building I'm so excited about it. I'm calling it a trader development course. And rather than trying to teach you my system, I build you as a trader first. We talk about those things. What is your risk profile? Jimbo asked, would you go long or short as it stands right now? Actually, there's no trade for me right now. I'm going to watch her break outside that box one way or the other. Why don't you reverse your position after you're stopped out? It's good enough to get out. It should be good enough to get in for the opposite side. And do you trail your stops? If I have a plan for both directions, this is a great example. I'll go back to the 1 hour chart. If I have a plan for both directions, if this pops out, and as it comes back in, I'm stopped out, I'll go ahead and take the short when it pops out the other side, as long as it follows the rules of my plan. What I will not do is if I get those minor support and resistance areas in here, it comes and stops out. I'm not going to immediately get into the shorts either, because that's almost like a revenge trade. There's no plan for it. In times when the adrenaline starts to really rush through your body and you get upset about you're getting overly excited and overzealous about gaining some pips, or at least gaining back the ones you lost, that kind of behavior, it can really be destructive to your account. And I do trail my stops, but I do it by support and resistance levels, not by specific pip amounts. Do I counter trend trade? Absolutely. Okay. There's a whole lot of other questions in here, but it looks like we really are pulling out of time. Somebody in here asked about the pound dollar pull. We really are running out of time here. So August 1st, Joe, on my website, and I want to tell you the name of it now, but I was working with the developer in detail yesterday, and it's really not ready to be looked at yet, but please stay in touch with me. Of course, I'll be here. So I get to spend time with you guys again next Tuesday if you have me. Again, thanks to everyone. Thank you, Maud. Thank you, Adinda, for doing the recording. Thank you to everyone who came. I really hope that you got something good out of it, and hopefully I'll get to see you again next week.